I would now like to invite my panelists to join me at the front for our discussion because I would love to get their thoughts on what they think of ITM 2025, as well as get them to share their insights and some of the opportunities and strategies for this industry. Please have a seat. So let me introduce them. To my left, I have the Deputy Managing Director of Markets and Development at MAS, Mr. Leong Chiong. And then to Chiong's left, we have Mr. Wong Kiju. He's the CEO of HSBC Singapore. Morning, Kiju and Chiong. And then the other lady on this panel today, Ms. Deborah Ho. She is the country head of Singapore and the head of Southeast Asia for Blackrock. Welcome, Deborah. Next to Deborah, we have Mr. Kwee Juan, and he is the Managing Director and the Group Head of Planning and Strategy at DBS Bank. And rounding up our panel this morning, Mr. Andrew Yeo, and he's the CEO of Income Insurance Limited. Welcome, ladies and gentlemen. We've just heard what ITM 2025 sets out to do. It is very exciting, but as DPM pointed out, it is an ambitious plan, lots of risks and opportunities. So I'd like to hear from each of you, which main pillar or maybe which component stood out the most for you? Because there were really so many parts, right? Is it about the one that excites you the most? Is it about enabling new models of digital finance, supporting the tokenization of the real economy or financial assets? Or again, is it that $400 million fund to bring in more talent to the organization? So let's see which one resonates the most. I want to start with the panelists furthest from me, Andrew, and then we'll move to Kwee, Deborah, Kiju. Andrew.
Hi, good morning, and thanks for having me. I think for this latest ITM refresh, it really shows or demonstrate the appetite to actually change with the times and the determination to actually digitalize infrastructure as well as building networks, right, to actually build market access. And I think it bodes well for especially somebody like us who is very focused in embedded finance. I think all this investment is going to bode well for embedded finance. We have started a journey in exploring into embedded finance. I have found some traction in that space, and definitely we'll be looking forward to actually exploring more opportunities in that space. The other aspect is really about the investment in capital. So it's not just about the deployment of capital, but the investment in human capital, especially in the human capital towards net zero. Because research have shown that a lot of organizations have set net zero targets, but have all, I think, know that it is very difficult, if not impossible, right, to achieve those targets by the set timelines. And all this is because of the lack of human capital in this space. And for organizations to achieve net zero targets, I think it is not a one person or one department role. It is about the entire organization, right, really having this sustainability or net zero mindset in the everyday work that they do. And for that to happen, the entire organization's level of competency in this space have to be elevated, right? Because it's not just one function or one person's job. So I think the investment in, or that this really calls for investment in competency and knowledge. And of course, a bit incentive will help to nudge this along the way.
We always love a good incentive. Thank you, Andrew. Kwee, your thoughts?
I think two pillars I picked up two pillars that is really exciting, which is digitalizing the financial infrastructure, and secondly, shaping the future financial network. In my mind, I would collectively call this as reimagining the financial market infrastructure. And I'm really excited about this because with the advent of new technology that we see, blockchain, tokenization, this gives Singapore a chance to take leadership in reshaping this new world, not only just through the technology, but also with regulation and law that we can set, and as well as new business models that we can create. And in fact, just a little bit of a fun fact, and I'm sure all of you know, the whole financial market infrastructure hasn't really been changed in the last 50 years or so. The last biggest change that we saw was in the late 60s, early 70s, when this whole idea of immobilization and dematerialization of physical scripts into digital records for banks to then use it, or exchanges to use it to then clear transactions very easily. So I think we're at that cusp with this new technology, and I'm really, really excited that we can create new models with these new technologies, and Singapore can lead.
Models. Thank you. Thank you very much, Kwee. Deborah, I'd love to get your insights on this too.
Sure. So the big standout for me is the doubling down of Singapore's financial sector on the net zero transition. I mean, it's something that I know that we've been focusing on. I mean, at some point in the past, but really, I think that this time, it's something that really we can grab our hands around, because it's going to be a defining feature, of Singapore's financial sector, and it pretty much aligns our nation's ambitions to reach net zero by mid-century. I mean, Minister was talking about how volatile, the world is these days.
Yes.
I would even say it's downright scary. And things like stability and certainty are in short supply. That's something that, I guess in Singapore we do well. I mean, we plan very, very long term. But what feels like seismic shifts these days really is clear signal that collectively, we really need to rally around the need to decarbonize the global economy. And I think that the financial sector has a very important role to play in this. And so in spite of being small, Singapore has had a long history of making outsized contributions in spite of our in spite of the size of our geographical footprint. But net, I mean, these ITM targets and our ability to execute around developing capabilities, data, and sustainability will really put us in good stead, but we need to be brave.
So again, is that pillar on catalyzing Asia's transformation or movement to net zero, and something that Andrew also picked up on. Thank you, Deborah.
Thank you.
Kiju.
Thanks, Yvonne. My own view is really around, how we have seen the ITM tool or the refresh ITM come about, and, versus what we had, previously. So the previous ITM was done pre-pandemic and pre some of the geopolitical tensions you've seen. So it's been really encouraging to see how bold we have been and how ambitious we've been with this new ITM. So the pillars that really have stood up for me, and I very much resonate with what Deborah was indicating, was really our transition towards net zero. I think this is really an existential threat that we all face, right, within companies that operate in Singapore, and I think the financial services providers here in Singapore really have a big role to play to catalyze some of this change as our customers go through new technology transition and the need for finance, right, to help them along this journey. I think to what DPM Wong was saying too, the 3Ds, right, will really be important for us, right? Whether it's around the definitions, around the data, and around the disclosure, right? So these set up great frameworks for us to take this forward. I think last but not least, is really around the manpower piece, right? And really, when I look at the ambitions that we have on the ITM, this really requires the manpower piece and to be there to support the ambitions that we have as a nation. So that two pillars, right, really stood out very strongly for me.
Net zero and manpower. Thank you, Kiju. So before I come to Chiong, I'd like to change up the question a little bit for him, because I was told since he's from MAS, so no need to give chance today. Yeah? Still in the same vein, but basically this ITM, some of the strategies are focused on enhancing our existing strength in asset classes, and the other strategies focus on helping us to better prepare for the future, right, by addressing some of the key structural drivers such as technology and sustainability. So why do you think having both these strategies are important, Chiong?
Thanks,
and then you can tell me which one stood out the most for you.
Right. Okay. So just to maybe share 3 observations. And this is coming at it from a kind of a behind the scenes look at how the MAS team approached this ITM. First, I think, the process, just to say that we don't see this as an MAS product, but we see this as a product from the financial industry. Reason why I say this is because about a year ago, my teams went out and consulted actually many of you, right, to get a better sense how you're thinking about the future and what does it take for the financial center to stay relevant. And this was against the environment, which was actually growing in complexity. So we also consulted our FCAT members, Financial Center Advisory Panel members, who have also given us a lot of guidance and advice. So really, just to express great appreciation Based on all the inputs that you have given, it has culminated in the ITM, which was presented today. So many thanks for all the guidance and feedback. Now, second, compared to ITM 1.0, I would say that this ITM has much greater breadth and depth. ITM 1.0, a lot of it focused on today's asset classes. ITM 2025, as you said, first it was built. I think the strategies that we put in place for ITM 1.0, in a sense, has been borne out, and that is what enabled the financial sector to grow well and exceed the ITM 1.0 targets. So I think the first thing we did was to review existing asset classes and ask ourselves how to strengthen value proposition. Second, also to look at other structural drivers, sustainability and digital, and ask ourselves how does it play, how does it work out in our industry transformation map, and incorporate that in. Across all the various pillars that DPM presented, the test that we applied was the three things. First, across all the strategies, how does it relate to connecting global markets? How does it relate to supporting Asia's development? And how does it relate to serving Singapore's economy? So it's not just about being the top three, right? Top three is just a ranking. But first is about connectivity. Then it's also about purpose. And also what is the nexus and how we can strengthen the nexus to the real economy. So that's the second observation. The third observation is, we've had to take a forward-looking view. As DPM said, nobody knows what the future will be or what it will look like. But we needed to take a view. It is not about taking big bets on the future, but it's actually about looking across and seeing what potential future states may materialize. And then as we peer into the horizon, we stare at sustainability and Web3. I think these are all very difficult questions that we've had to address. We make an attempt in ITM 2025. My key takeaway, we have to adopt a multidisciplinary approach. So it's no longer sufficient just to be a runner. We have to be a triathlete, right? Financial services has to acquire new skills and capabilities. Organizations need to acquire new skills and capabilities. But I think that, going back to a key theme from last year's MAS 50th anniversary celebrations, partnership is everything. Thanks.
So nicely said. On a personal note, though, which I know you said it's a multidisciplinary approach, triathlete, you got to be good at everything. If you had to choose one that really you're most excited about and that, we had a meeting and said, okay, let's start with this first, which would it be?
So it's not about everyone being a triathlete, but it's really from an organization perspective and then from a financial system perspective, how do we harness the strengths of the collective parts? So I wouldn't say whether it's running, swimming, or cycling.
Very smooth, very smooth.
Yeah,
okay,
yeah,
maybe by the end of this panel discussion, I'll be able to get something out of you. Thank you, Chiong. So I would like to just get some on-the-ground examples to see how ITM 2025 can really fit into some of the organization's growth plans. So I want to come to Kwee and then Deborah for this one. Based on what you said, how do you see HSBC Singapore's current strategy aligning with ITM 2025 in terms of digitalization and sustainable finance?
Yvonne, when I look at HSBC's ambitions in Singapore, right, and I compare it with the ITM's ambitions, right, both are just as huge and just as vast. So there is a lot that as an organization in Singapore, we do want to achieve, and really is going back to our purpose and really to connect our clients locally, regionally, and globally to opportunities. Now, the various pillars of the ITM that we see today are all going to play contributory parts, right, to that. But maybe I just want to focus on three specific examples of where I feel that it will help a lot. And maybe the first one is going back again to the pillar on sustainability. Now, as an organization, as a bank, we have huge ambitions, right, to be net zero financial emissions by 2050. And to achieve that really requires us to help our clients, right, on this transition journey. The challenge that we face today is that you've got clients where they are at different, I say different milestones, right, within this journey. And some have resources and some, like for example, maybe the small SMEs, they will not have the resources to do this. But in order for us to really push out, solutions that are practical, that are tangible, we'll need the framework. We'll need frameworks where we have a standard that we can all adhere to. Right. So what we're doing in terms of in Singapore, and to get all this like data definitions, right, and get the disclosure standards in place, gives us a good platform, right, to be able to achieve those aspirations to help our clients. I think second of all, when I look at our ambitions in Singapore, we want to create a huge, wealth and health, proposition in Singapore, right? And when I looked at the enhancing of the asset classes and the multifaceted approach to which we're enhancing the asset classes in Singapore will give us a good platform again to achieve these aspirations. And thirdly, and I think most importantly, in order for us to achieve all this, it's really around the focus on the manpower pillar, right? And it's not about replacement of individuals in Singapore, but it's also being open to get the talent in to augment the talent that we have in Singapore, and for the skill sets to be passed on, right? As an international financial center, my belief has always been one where we need to be open to get talent into Singapore and get talent in Singapore to pass on the skill sets, right, to the locals here. So that we become even bigger and even stronger. So I see these three key areas are areas where it really helps us achieve our ambitions.
So alignment in terms of your sustainability goals, the building up of the health and wealth kind of hub there, and on the manpower issues and goals, right? Thank you, Kiju. Deborah, how about you? Blackrock's key focus areas in tandem with ITM 2025 strategy.
So I guess Kiju and I can talk about sustainability all day long, right?
GFIT members, yeah.
So I guess I'll provide some perspective as an asset manager. I mean, obviously what we do is manage other people's money. But Asia Pacific is one of BlackRock's key growth engines. We have ambitious goals to capture some of the growth drivers and opportunities across the region. So sustainable investing as well as private markets, two very, very important priorities for us here. And there are quite a few areas where I see alignment in BlackRock's growth plans, as well as the ITM strategies, which actually makes my job quite easy, because then it gives my bosses in New York comfort, that in Singapore, we execute on what we do. So the first thing I want to talk about is building a comprehensive ecosystem for green and transition finance, some of which was already mentioned by Kiju. But it's really important to be able to have the whole infrastructure and partnerships to be able to carry out these investing technologies, as well as some of the activities that we do here on the portfolio management side. The second thing is to create an enabling ecosystem for private capital. And private capital is a really important asset class because it channels investments towards transition. And so we need investments in infrastructure, in technologies that are going to help decarbonize the economy, but also to help companies that currently could be brown, but they perform really important functions that basically society needs. But there is a move to try and help them decarbonize, and they are going to need funding and resources. At BlackRock, we're already building an infrastructure hub in Singapore, as well as relocating some of our senior renewable power portfolio managers here as well. And we've also had a significant presence in Asia credit for quite a while. So doing Asia private credit is something that is a natural extension and something that we're focused on. And so being able to have this full spectrum of capabilities in Singapore and with the ITM support, that's something that will help us create more awareness in the asset class, and also to, I would say, help it become a lot more mainstream. So the two other areas would be in creating Singapore's ability, or rather encouraging Singapore to become a top fund domicile. So BlackRock has already used the VCC in some of our credit funds. So thanks to Gillian, the VCC has given us greater operational flexibility, as well as tax benefits. And it also helped enable the asset management industry to delve further into the alternative space. And last but not least, really, really important, it's been mentioned by, I think, everyone here about the importance about, having a strong talent pool. Our talent pool in Singapore really has to be world standard. There's just no negotiating that. And, especially when you're talking about a world that's becoming increasingly balkanized, we have to go the other way. Okay, we have to stay open, and we have to realize that, you know what, the advantages that have been bestowed on us recently by, I guess, by providence, you know, through chance, we need to capitalize on that fast, because I believe that the window will close, because good talent will go to where the opportunities are and where they and their families feel at home. Thank you.
Thank you so much, Deborah. I want to talk now about technology and innovation, because these are key buzzwords in the industry. But what exactly does it mean for the guy on the street, right? How can we leverage technology to create more value, not just for financial institutions and large corporates, but also for local enterprises and individuals like you and I? So I want to come to my tech guy over there, Kwee, and then Andrew, and then back to Chiong. So let me start with Kwee. Can you give us an update on DBS's latest efforts in digital transformation? I mean, that was one of the biggest things that stood out for you, the main pillar, right? Digital transformation and innovation. I know the bank has been experimenting with AI and blockchain. So how are you using tech to continue to drive consumer engagement, but also ensuring financial inclusion in the broader community? Kwee.
Well, thanks, Yvonne, for now calling me a tech guy. You discovered my roots. I have a degree in computer science, and indeed, yes, I'm tech by nature.
So you are our geek for today.
I am,
Yeah.
but I'm also a banker. I think, you know, if you look at the whole innovation and digitalization that we've gone through in DBS, one of the things that we work really hard on is to make sure that everything that doesn't require a physical element of banking can be done online. So 9 out of 10 of our transactions that used to be done in branches now can be done digitally. The only reason why they have to go to a branch is because there's this famous thing called a passbook, that they want to go to the bank and make an update on their book. But if they give up on that book, then everything is online for all of our customers. For those who don't need it, it's available, and and I think that's one way of really making it convenient for men in the street, because all of us are starved on time. And I think the other one that is really quite interesting is, before Singapore started onto the journey of fast and pay now, DBS started the whole PayLah wallet with a vision of saying it would be only for peer-to-peer. But I think over time, what we have evolved that into is really an everyday app that allows people to do virtually anything. You can order food, you can do online shopping, you can get ride-hailing, and more recently, just a fun fact, it is also the app that you can use to go and discover about all the 10,000 hawkers in Singapore. We call it Hawkerpedia. And so that makes it fun, right? I mean, it's engaging. Otherwise, it's very boring. Nobody wants to look at bank account every day or every minute.
And
but
10,000
you use that to
hawkers,
engage.
so lots of food options for
Lots
our
of food option, and you can
destination.
pay.
Yeah.
You can pay and scan at those places. But I think more importantly, what we've also done is we have embarked on this journey of how do we integrate technology and intelligence into how we serve our customers. And that is where we have applied this whole AI and machine learning into the way we get good recommendations to our customers, especially in the wealth management journey, where we helped a lot of customers, and this is retail customers, bringing what we do for private wealth customers into the masses. And through the apps that we have, we help to give them recommendation, help them to plan, help them to manage their money, and then learning to invest. And all these are done through the app, and that's really broadening, democratizing wealth, right? For the SME, we have also applied the same technology, where we use it to allow us to discover their financing needs. So we discover when they need money and then prompt them and say, maybe this is what you need for this tenor. And internally, we call this 110, which is 1 minute to apply, 1 second to approve, and 0 seconds in your hands. So it's instant disbursement the moment the approval is done. So I think these are the stuff that we have done, both on the consumer side and as well as SME, leveraging technology to make it more convenient and easy for people to bank with us.
Excellent. I can see how this is really feeds into the realm of financial inclusion for the broader community. It's very exciting. Thank you, Juan. Well, speaking of apps, when I think of income, Andrew, I think of that snack app, right? Because this is the industry's first micro ILP, allowing consumers to build their own investable portfolio with bite-sized premiums. What has been the feedback been like for this? And are there plans at Income to expand on its utility, or are you working on other user-friendly investment apps like these?
Yeah. So first and foremost is microinsurance. So
Oh,
ILP
microinsurance.
is one of the features or product that you can actually attach to within Snack, right? But I'll take a step back in sharing Income's own so-called mindset or thinking about innovation and technology. I think in our mind is that, you know, when it comes to technology and innovation, it means nothing to the individual or the corporate if it doesn't add value, right, to both parties. So it has to be a win-win situation. So definitely in applying tech and innovation, it has to really solve a real-world problem, a pain point for our customers, and that's how actually Snack was born. It was ideated out with our customers. So the three things that they actually point out to us is, first, they recognize the importance of insurance, especially critical illness, right? Second, the barrier entry is too high, right? And especially for segments or sectors, all right, like the gig economy, where the income levels are fluctuating. So I can't commit to a big amount per year or per month. So is there something that can actually go together with my lifestyle? Third, they want control, to be able to know exactly what they have, to be able to switch on and off as and when their lifestyles demands of it. Right, so it is with these insights that actually we coined up microinsurance, right? And at the same point in time with these insights, we were also fortunate to be able to find a good partner in Chiong Tech, who is able to actually provide the technology to augment our innovations, right? Such that we can actually, in a way, deconstruct insurance, lower the barrier entry, right? Where individuals can actually purchase or accumulate insurance as part of their lifestyle, whether they're buying a cup of coffee, grocery shopping, swiping their Visa card or MasterCard, to be fair, or, you know, walking on the streets, taking their steps, right? So I think this has really, in a way, deconstructed insurance and make it much more palatable for the individuals. But at the same point in time, I think what has also allowed us is also continue to evolve this together, not just with our individual customers, but also with our corporate customers, where corporates and merchants are seeing insurance as a form of reward, right? Beyond just the normal points that you collect. So in this regard, we have actually worked with somebody like a Remark, right, where we actually leverage on wearables, where we actually award insurance based on the fitness level of the individual. At the same point in time, we have also have about 100 merchants, our partners, who have actually partnered up with SnackUp, where they actually reward customers for their patronage. So I think technology has actually enabled us to actually break down a lot of these barriers. And for Snack, we're actually at version 3 right now. So definitely you'll see a new phase of Snack, where we have actually revamped the entire journey. I'm glad to say that, you know, with our own endeavor in this space, we have about 80,000 customers on Snack, and 3/4 of them actually weren't income customers in the first place. So it has allowed us to actually venture into new segments within Singapore. But at the same point in time, this capability has also enabled us to actually venture out into the region, where we are able to strike up strategic partnerships between insurers as well as digital ecosystem partners. And I think to a certain extent, I think it has greater application in the countries around Singapore, vis-a-vis Singapore, because of the geographical constraint, as well as, you know, the agrarian societies that our neighboring countries has, and microinsurance does provide that ability. But beyond microinsurance, the technology and innovation actually have more thought into subscription-based insurance and usage-based insurance as well. And that has also allowed us to work with platforms like Caro, where we actually implemented a pay-per-mile kind of motor insurance. But at the same point in time, we continue to embark and explore new technologies. So one of the areas that we are getting into is actually blockchain. So recently we conducted a hackathon amongst university students, not just in Singapore, but around the region. So leveraging on the students, you know, it makes us feel young again. But I think we wanted to also leverage on their young and fresh mind in terms of how something like blockchain can be applied to insurance. So got a lot of interesting ideas, right? Raw, but I think a lot of potential, something that we can continue to work on.
A lot of interesting things happening on that front. Chiong, were you encouraged by the examples that Kwee, Juan, and Andrew just shared in terms of, you know, creating more value for the individual on the street with tech and innovation?
For sure. I think at the retail level, right, it's quite clear that many FIs are upping their game, right? Because at the end of the day, it's all about serving their customers well, facilitating ease of, you know, access to financial services, facilitating ease of payments and transactions. Which customer doesn't want that? So I think from MES's perspective, you know, it's all about, number one, you know, whether there's scope to work with the industry to provide enabling infrastructure, even as they try to up their game. And as well as, you know, I think it was earlier mentioned by Andrew, embedded finance, which is, you know, finance which is not just provided directly by FIs, but through platforms, and also how we can, you know, facilitate greater awareness and opportunities, you know, for FIs to do that. But I think it's also important to cover what we are doing at the wholesale space, because, you know, at the wholesale level, I think as mentioned by DPM in the speech, you know, we are looking at promising use cases in different areas, in trade finance, in capital markets, as well as cross-border payments. I think that's important because, you know, when you look across many jurisdictions, a lot of the pilots that are going on are domestic in nature. But you know, for us, the opportunity really lies on a cross-border basis, because, you know, on the cross-border basis, that's where you also see great inefficiencies, right, in cross-border payments and settlements. And as you know, Kwee Juan said, there's an opportunity to relook at the financial infrastructure, fix the plumbing, right, and make it far more efficient for corporates as well as investors, right? For corporates, cash management and tracking of cash flows. For investors, better execution of their investment strategies, and simplify post-trade activities, right? One last thing on cross-border. A lot of MES's pilots are actually, you know, doing pilots across different currencies. As I said, you know, in the world of CBDCs, many central banks are doing experiments, but experiments locally, right? For us, you know, I think, you know, audience is familiar with MES's position on the Sing dollar CBDC. Not immediately urgent because the payments, you know, is serving us well. However, as and when, right, CBDCs become more mainstream, it is really about connectivity. It is about interoperability across currencies. As DPM also said in the speech, the future may start to gravitate towards different configurations of financial networks and liquidity pools. Regardless of how it evolves, we want to make sure that Singapore's financial center is at the center of it, connecting across and ensuring interoperability across. And that's what excites us for the future of financial services and technology.
There we have it. What excites you guys the most? The future of connectivity. I can't wait to see what 2025 will bring just in 3 years' time. Okay, I'm going to ramp things up a little bit. Just want to let you know not to go, because we do have a tea reception after this, okay? So you have to stay. But I want to bring back my sustainability advocates right now and bring back that main pillar about catalyzing Asia's transition to net zero. So coming back to Kiju and Deborah, how exactly can the public and private sectors work more closely together to accelerate Asia's transition to green? I mean, in terms of the role that Singapore played, DPM has talked about $100 million being committed, right, to support green fintech, the rolling out of sustainable finance solutions, and of course, enhancing sustainability disclosures as the new partnership that was just inked between MAS and SGX, for example. So being part of GFIT, the Green Finance Industry Task Force, that's right. Give us a progress update, Kiju, on what's happening there right now in terms of partnership and collaboration. And I want to come to Deborah.
Okay, thanks, Yvonne. I think as DPM was indicating, right, that we need to learn to walk before we can run. So I think when we look at the sustainable finance, arena today.
But someone just talked about being a triathlete.
Yeah, I know, right? But before we can go that direction, I think for the sustainability bit, right, we still got quite a fair ways to go. So I think from when I look at what GFIT is doing today in Singapore and really trying to put the framework and the building blocks, right, to where we can do a lot more. So from a GFIT perspective, it's really a public-private partnership where we are working very closely with MES, the banks, insurers, asset managers coming together to really define and put that framework together for Singapore. Now, when we put the framework together for Singapore, there's also that wider aspiration for it to be brought out on a wider perspective. So 4 key areas that we're looking at, right? It's around the 3 Ds that DPM was talking about. We're looking to put together the taxonomies, right, in the market. We're looking to look at the disclosure standards, risk management, and also the sustainability solutions that are available. So I think the GFIT team, across the industry has worked very closely with MES to come up with some really good frameworks that we hope to be able to put into action. When I'm sharing this with my counterparts across the region, what I'm finding too is there's huge interest, right? So this is where I think Singapore, can play a much bigger role, right, in terms of putting these building blocks. And again, I think it's important for us to do this here because a lot of, I guess, the building blocks that are from Europe or from the rest, right, have a very European lens, right, have a very, different lens from where we are and our development stage in Asia. So it's really important for us to come out with something that works for us in Asia, works for us in Singapore, but can then be used to be carried out, across the region. So I think those are some of the key things that, we're putting into place, right now. And that's where I think that public-private partnership really needs to work together, especially on sustainability. It's that ecosystem that we create, right, to get that synergy, right, in terms of, driving out the solutions. Yeah.
Thank you very much, Kiju. Deborah, your thoughts on this then? I mean, what are some of the opportunities that green finance can bring to our FIs here?
Sure. Maybe I'll start by putting a bit of context, around the whole issue, right? So, I mean, we talked about how, Asia is pretty much a hotspot when it comes to things like, climate change. And we basically have, a lot to lose, as a consequence, of natural disasters, extreme weather events, and, these high temperatures that we continue to see over the summer, right? But at the same time, we also have very promising solutions. So countries in Asia actually play quite a critical role in the green supply chains. So for example, China's EV and solar tech. Another example is Korea's innovation in battery technology and all that. And all that actually provides investment opportunities for people like us, that allocate funds. The other thing I was going to say is that the kind of numbers that have been thrown around, I mean, like $2 trillion needed in the next decade for infrastructure investing, just to get us, towards net zero, is not small potatoes. I mean, it's just mind-boggling. So how do we get private and public capital together to be able to cooperate and do that? And one of the ways is, of course, in getting public money as well as philanthropies, which is what Blackrock has done through the Climate Finance Partnership, to basically take the first loss piece, in blended finance, so that other people can take, the rest of the transaction. But scaling it is really, really important. And another example I'd like to mention is, a conversation actually that Dylan had with my boss, Larry Fink. And, within 2 weeks, Decarbonization Partners, which is a JV between Blackrock and Temasek, was born. And that basically gathers capital, from third-party investors to invest in technologies that will bring about, a net zero world.
And that ties very nicely to your first point that you mentioned today about galvanizing capital to accelerate that transition to net zero. Thank you, Deborah.
Thank you.
Actually,
John,
Yvonne, I just want to add on
Sure.
that I think the whole transition towards green is really, really important. And you would have seen earlier this week that we have published our pathway to net zero,
That's right, DBS.
supporting Asia's transition to a low carbon economy across 7 industries. And we thought it was important to come up with such a position because we have committed to net zero by 2015. And the paper is publicly available. So we talked a lot about how can we help our customers in our base to transition, primarily in 7 industries: power, oil and gas, aviation, shipping, automotive, steel, and real estate. And not only just covering loans, but also looking at capital markets, because it is important, because that's the other source of money that they would use. We recognize that it is difficult, which is why the 3D that DPM talked about on what Singapore could do will really be helpful, because that will set a lot of data set available for companies and as well as banks towards that vision of net zero.
Thank you for highlighting that for us, Kwee. Now, before we wrap, I still want to just pick up the last pillar about people, because when DPM talked about it, you could see it's like a blanket nods, lots of nods in the audience, like we need the talent, we need the manpower. So ITM 2025, very ambitious, but how do we ensure that our people can keep up, both locally and also bringing global talent from abroad? And DPM mentioned tapping into polytechnic grads as a potential resource. So I want to come to Andrew for this one first, because I know you've charted out a very rewarding career path for yourself after graduating from Polytechnic. Maybe share your story with us, and also what advice do you have for polygrads who might want to enter the financial services industry?
Thanks for the question. So probably 3 aspects here, 1 for corporates and 2 probably for polygrads. For corporates is keep an open mind in terms of your talent pipeline. I think not get too fixated by the area of training or the faculty that the graduates comes from, because I think the diversity of the mindset will add to innovation and creativity. Right? And as an example, I'm a naval architect by training, so I'm not a thoroughbred finance guy, right? But I chanced to point into the financial services because an insurer decades ago decided that they need non-financial mid-career changes into the financial industry, and that's how I got myself into it. Other than the fact that it pays better. Yeah. So as Yvonne mentioned, I'm also a polygrad, right? So 2 aspects there to validate DPM's point on polygrads. First of all, hopefully I validate the quality of polygrads that we generate out of our polys, and also about the overseas exposure. So I think first and foremost for polygrads, or rather I chose the poly route because I like the vocational curriculum of the Polytechnic stream. And the other aspect is also forced by circumstance. I need to find the shortest path to start working and making money when I was younger. But that said, I think the advice to polygrads is don't limit your career choices and options by the faculty or by your training. Right? Because what I heard is only 5% of polygrads enter the financial sector. Right? Of course, that numbers need to be validated, but if that is true, it is a shockingly low number, right? I guess, by way of the training that we receive, a lot of us will be much more engineers, but there are non-engineering programs within Polytechnic, so I'm a bit surprised by the low number. But so I always believe that it takes 2 hands to clap. Well, the corporates can provide all the programs, but individually, let's not get limited by our area of training and expand your peripheral when it comes to career choices. Because the vocational and the STEM training does provide very good foundation for polygrads to actually pick up new skills. All right. The other aspect is about overseas training. So I also have a chance to actually work overseas for an extended period of time. And I would say that the exposure and experience they get from working overseas, right? Despite the fact that it's very difficult to get out of the comfort zone in Singapore because Singapore is just too comfortable. But if you're able to unplug yourself from Singapore and work extensively overseas, live and working extensively overseas, you'll find that the exposure and experience will be extremely rewarding. Right? So do not limit yourself by the area of your training or your studies, right? And if there's an opportunity, go out and expose yourself.
Thank you, Andrew. I also love your candidness as to why you switched careers. Kwee Juan, I know at DBS, what are you guys doing to continue to attract and retain talent? I understand that your SEED program, the Skill Enhancement Education Development Program, is very popular with fresh grads, but you've recently also extended it to non-STEM graduates. So that's your way of expanding your local talent pool.
Yeah, we did. And I think, it's quite obvious that DBS believes in building and developing local talent. Internally, we like to use the term build your own timber. And from that perspective, we see it from three lenses. One is first and foremost within DBS. What do we do with all of our employees? Because it is important for us to upskill all of them. So since 2020, we have upskilled about 7,000 of them into this new skill sets that we need them in digital, in data, in customer experience. We've also helped about 1,500 of them convert jobs, because a lot of the jobs actually in ITM 1.0, we talked a lot about jobs going obsolete, and obviously that happened. And 1,005 jobs were converted into new roles and redesigned roles, and people moved on to those roles. We've also leveraged on the work that was also done out of ITM 1.0, where we started the whole certification of skills in banking and finance by IBF. So we sent about 1,200 of our wealth staff in wealth management and private banking to join those programs. But I think what is really important is with all these things that we have done is enable us to build new businesses. So if we've gone into blockchain like Partior, and even starting new businesses together with partners like SGX and Temasek and StanChart in carbon impact exchange. So these are things would not have been possible had we not trained the people and exposed them. The second way that we work on building local talent is to partner with the local institutions, starting with ITE. So we talked a lot about poly, but ITE is a good source, polytechnics and universities, where the whole idea was to go with work and study program that includes internship and apprenticeship and mentorship. And that helped them to really gain an insight into what it is like to work and applying what they study. And so we joined the Tech Skills Accelerator for ITE and poly programs. And I think the last one is really working with IBF in this technology and finance immersion program. I'm really very thankful to DPM for highlighting Brian, where we worked with IBF to transition mid-career so that people who are moving from banking side into more technical, and we helped that transition into cloud computing, into data analytics. And to date, we have hired 117 of such Brians, and moving people from non-tech into tech. And also you talked a little bit about the SEED program. It is true. It is extended beyond people with tech background. And over the last 2 years, we've hired more than 700. And that's really, really important because it shows that there are pathways for people to go. And I think the last thing I just want to call out, and a lot of people in this room may have remembered this, but Singapore, when we started in the 70s, growing the FX industry, we were nothing. We were not present in the FX world, but we brought in talent to help build new businesses. And we spun a whole new generation of leaders in FX and rates business. Some of them are sitting in this room, and that only came about because of the fact that there was transfer of skill set. And I sincerely hope that each and every one of us in this room, because all of our businesses exist because we got a license. And therefore, with that license, it is a privilege. And therefore, we have a social responsibility to build talent with what we have. So that's my call to the industry.
A social privilege to build talent. That's really nice. Thank you very much, Kwee Juan. Chiong, your take on this, does the $400 million fund also excite you? Because there's so much to be done there, right? Of capability building and all that.
So let me tell you a story before I address the $400 million question. If you look at talent development during the period of ITM 1.0 versus what we are looking at now. ITM 1.0, we turn to the market, right? FIs have their own corporate building programs, right? Where they look for skilled talent, they go to headhunters. Generally speaking, there was enough slack in the market, to facilitate these sort of moves. I think that model was severely tested in the last 2 years. First, COVID, because COVID, travel restrictions, expat staff wanting to go home, it really tested workforce resilience, right? How do you keep your operations running, right? When there's certainty in terms of whether you can actually keep your people operating in a single location. Second is, as DPM mentioned, competition for talent is now global. I would say across many of the FIs, shortage of talent is almost chronic, right? So these two things really have severely tested the traditional model in terms of how we attract and retain talent. So I thought, the dual strategy is key, right? Find ways to continue to compete to attract global talent. But second, as Juan briefly mentioned, grow your own timber. Every FI needs to grow your own timber, right? And when you look at all the various schemes that MAS has put in place, schemes that help FIs, bring talent in at the entry level to build the base, schemes that help FIs make career conversions, upskilling, reskilling, schemes that help FIs develop leadership talent, they're all there, right? All that we have, put in place, over actually, the 3 to 5 years. It's very comprehensive. For FIs who are, right, serious about growing your own timber, please make full use of them, right? They are there to be used. I think going forward, just to say that we, notwithstanding, us having a comprehensive suite of things, I would just call out maybe 3 areas that we really need to double down on. First, leadership. DPM announced the Talent and Leaders in Finance program. This is very important because, Kwee mentioned their experience with the FX and how, from the 70s all the way until now, it spawned an entire generation of leaders in that space. We can do that. We can do that, right? Across all the various sectors of the financial industry. Second, I would say, taking the lead from DBS's SEED program as an example, where it is not just taking tech talent and training them, but taking non-tech talent and training them in tech. I would say the same for sustainability as well, right? Going back to my triathlete example, you are in your comfort zone when you run, right? But please learn how to swim, right? You don't have to be an Olympic swimmer, but please learn how to swim.
Very high expectation.
And then the third one speaks to individuals. Individuals take charge, right? Financial industry professionals take charge of your own learning. And similarly, all of MAS's schemes support you in that, right? So I do think that, between MAS and what we have provided for, 400 million, and, the financial institutions with a serious intent to grow your own timber and with individuals taking charge, I think we will do well.
Thank you very much, Chiong. So we're going to wrap the panel discussion now. And I would like to invite my guest panelists, Andrew, Juan, Deborah, and Kiju, to summarize for me your vision of what the financial services sector will look like 3 years from now, 2025. 1 sentence or less, okay? And no semicolons in your sentence also. So keep it nice and short. Andrew.
So my wish is that with the great ambition of this ITM 2025, that we are complemented by a population that is always increasing in financial literacy so that they can make full use of the various products and accesses that we're trying to create. And at the same point in time, not be so susceptible to scams.
Thank you, Andrew. Juan.
Most integrated financial hub.
The most integrated financial hub. Very
Most
nice.
innovative,
Oh, okay. There's still more. Okay. Most integrated.
best
most innovative.
knowledge
Oh, okay.
and expertise hub.
Okay, wow.
So
Most
all
integrated,
these,
most innovative.
all these marries the idea of making private wealth capital available,
Mm.
seamlessly intermediated
Mm.
with fundraising activities, supported by innovation,
Wow, I
where
hope
we
I
can
missed that.
speedily go from concept to commercialization
Okay.
and having the large talent pool working alongside with global talent to
You
build
had-
the new finance. That's it.
You had me at most innovative and most integrated. Okay. Thank you. Yeah, but that was in one breath. You're right, Kiju. Deborah.
I'd like us to be a force for good, enabling our people, our
Force for
country,
good,
and the world.
yes. Oh, you should have heard Sing Chong went, yay, yes, a force for good. And Kiju.
And by just saying that, I would love for Singapore as a financial center to continue being a leading international financial center driven by purpose, future forward, progressive, but most importantly, inclusive.
Inclusive. Thank you so much, Kiju. Thank you to my panelists, Andrew, Kwee, Juan, Deborah, Kiju, and Sing Chong for sharing your insights into the relevance of the ITM strategies and giving us examples of how the FIs can implement these strategies. If I could just quickly summarize in a nutshell, essentially the ITM is fundamentally by Singapore, for Singapore, Asia, and to connect global economies so that growth in this sector continues to be inclusive. And that's why, as DPM pointed out, we have to focus on the 5 main pillars of ramping up digitalization and financial infrastructure, leveraging on our competitive advantage in current asset classes, also taking steps to shape the future of financial networks, and as well as to accelerate Asia's transition to net zero. So making Singapore the center for sustainable solutions, and most importantly, making sure that we have the manpower to help us achieve that. Because ultimately, I think by 2025, we want a financial services sector that has people which are financially literate, the most innovative, most integrated financial center that is a force for good and one that is future forward and also very inclusive. It's a tall order, but I believe we can get there. So how about a big round of applause for everyone today? Thank you so much.
Thank you.
Thank you, panelists. Ladies and gentlemen, we have come to the end of the launch event for ITM 2025. Thank you so much for joining us this Thursday morning. We would like to invite all our guests and panelists to DPM, if you have time, to join us at the tea reception just outside at the balcony. Thank you for being here. My name is Yvonne. We look forward to seeing you again next time. Bye-bye.